do your own research. Those are the conversations you hear when a lot of investment analysts or you hear people talking about the market. They expect you to, despite the information you hear, they expect you to end up doing your own research. And what does that mean? It means that you could just sit down, relax, and listen to Market Watch, brought to you by Nairametrics Television, where we talk about what is happening in the market, especially taking a look at the NGX. And this time around, we're starting with how the markets performed. Taking a look at last week, how the market really performed, 142,000 points. And then we're also taking a look at what is happening regarding dividend. Dividend for October 2025. UBA have the numbers. Zenith, we have the numbers. GTCO, Stanbic, all these numbers you're going to get as regards dividends. And then we're talking about divestment from Aradel. Who is divesting from Aradel? We have Capital Alliance. We're going to have this conversation on this episode of Market Watch. My name is Frank Fagba. You're very much welcome, as usual. Mukhtar Mohammed and Idikaja. Welcome to Market Watch.
Thank you always.
Yeah, so let us start with what happened last week. The market was seeing the All-Share Index rose by 0.07%, 0.7%, I beg your pardon. And remember that last week we had consistent losses as regards the market. I think we just had 2 days on the bullish moment, two days out of the whole 5 days in the week experienced some bullish move in the market. But this time around, we saw the market close on a decent sum. What's your take about that? What do you think? What do you think is, what's your take on these stocks? Better Glass, 6%, 647%. Year to date, we're seeing mutual benefits, 531% year to date. All these numbers, what's your take on these stocks?
Well, for me, I judge a stock by the liquidity of that stocks and also by the fundamentals of that stock, then by the technical analysis, where people like Indica does that technical analysis. But me, for one, I love the fundamentals and I also love the liquidity. If you look at Better Glass, I can say that there's so much liquidity there. So just a movement can be dragged on by 100,000 units.
Yeah.
And there's not so much liquidity there for those that the major shareholders are the one holding it. So for me, that's what I think. In terms of fundamentals, you can say they don't have a good fundamental, but again, the fundamental and liquidity may have to come hand in hand, so that I enter and I'm able to enter a stock and exit a stock at when due not. I enter a stock, I'll see the stock grow, and I want to exit, and I'm sorry. So for me, fundamentally, I still have my doubt about them. For mutual benefit, sometimes I ask what is driving that stock, because because that is a stock that over the years has not really reward investors in that stocks. That's what I think. They've not really rewarded. I stand to be corrected. In GTCO, I always have those numbers. I can't remember if they've paid dividend for the past 10 years. I don't think so. Even this was a stock at a point was suspended by the exchange because they did not submit their audited result for a long time. So that alone is a red flag for me. How liquid is mutual benefit? I can say that it's liquid because if you look at their share standing, it's very high. But again, who are really the ones trading on the mutual benefit? Are mostly traders. They see the low price, they go in there, they come out, they go in there, they come out. So yes, you can say they have liquidity, but I think mutual benefit for me is for traders. Then and again, it's largely driven by technical analysis. That's what I feel about both of them.
Yeah, to add to what he said, yes, at times stocks are driven by fundamental, technical analysis, and liquidity, and it could also be driven by sentiment. And in the case of mutual benefits, yes, he has that liquidity. I think it's the 16th most traded stock for the past 3 months. I think the sentiment is built around this insurance recapitalization. So the insurance sector stocks have been doing quite well of recent. In fact, second to consumer goods sector. So in that context, it could be because of that investors' sentiment. Though they have good liquidity, trading as the 16th most traded stock on the exchange for the past 3 months. Now, if we look at the Initiate, which is the third most, the third company that has the highest year-to-date gain.
429%.
Yeah, 429%. So I think yes, it's a small cap. It's a small cap company. I think 11 point something billion market cap. But if you look at it very well, you see that they have the free float is okay.
Yeah.
The free float is okay. As at end of June, they have about 47% free float, and that is okay somehow. But like he really pointed out, it's a small cap, and then the two price movement will shoot up the price.
So out of these three stocks that you see that have done decent numbers year to date, we're seeing Better Glass, we're seeing Mutual Benefit Assurance, and the initiatives. Which of them do you think is a decent buy, hold, or sell, if in your own opinion? Because these are decent numbers. Better Glass did 649%, Mutual Benefit 531%, and then the initiates is 429% year to date. Which of them do you think is a buy, sell, hold?
Yeah, for Better Glass,
yeah,
I think for if you're already there, you hold.
You hold.
Yeah, if you are not there yet, for new investors, I think for me, I would prefer a pullback so that you can now enter at a lower rate. That's for me. Then for the initiative, yes, I think for me, they have good fundamental. I think they have done very well so far in terms of fundamentals of their growth. As in dividend too, after returning from losses, I think over the past 5 years, they came back, I think, in 2023, and have sustained that, and they paid dividend in 2023, and I think 6 kobo, and now improved to 10 naira in 2024.
Yeah.
And if you look at their growth in earning growth in half year 2025, I think we are projecting that earning per share might even the dividend might get up to 20 kobo, which is okay, which is good. So for me, there for income-oriented investor, it is a buy. It is a buy for income if you are interested in dividends. It is a buy, and for those who are already in it, it's a hold for me.
Mukhtar Mohammed, buy, hold, sell.
For Better Glass, I think if you are there already, like he said, you could still hold. But again, if I'm there, personally, I will sell and wait for a pullback, depending on the price.
649%.
I'm telling you, in terms of the price, I think for me,
take your profit.
Take your profit.
It's much. 649. Yeah,
649%. That's pretty decent in any market. But I think that with what he's saying, we're not going to see a lot of newbie investors coming to that price coming to this stock at this price. 649. A lot of investors right now will be booking their profit, and you will just end up becoming the liquidity, exit liquidity.
That's why I said for if you have not gone in, you would like to, because
for me it's sell. It's sell because again, look, I'll do when I sell, I'll do comparing analysis and go into one that will give me another 200 or 300% before. And so definitely mine is for sell. For mutual benefits, I will sell if I'm there. And for me, that is a sell because again, NGX has talked about the recapitalization. If you see that recapitalization based on the share standing of mutual benefit, and they actually do that recapitalization, that stock might be the most the stock with the highest outstanding numbers of shares. So for me now, I will sell. Okay. Also, and when you see that, they might also want to reduce it by doing share reconstruction. So I rather sell and then go in when there is after share reconstruction. That's for mutual benefit. For Nigeria, look, like he said, if they've been able to weather the storm and come through, I will be holding. If I am there.
For initiatives,
for initiative, I will be holding. Okay. Whether I will buy, I don't think so, but I will be holding if I'm already there.
Well, moving on to the next story. Look at what is happening with dividend for October 2025. Many people on social media always say giveaway. Now, this is the concept of giveaway in our capital market. Look at what is happening. We have UBA in October, some companies, including the 4 tier 1 banks, are rewarding are rewarding shareholders with dividend payouts. Now, UBA is set to give out dividend payouts of 25 kobo, payable on the 10th of October 2025. So I know some of you who are investors. When I come for my pound of flesh, don't tell me money no day. Because come on, you're going to be paid very soon. And Zenith Bank, 1 naira 25 kobo dividend, payable on the 10th, same 10th of October. And then GTCO, 1 naira dividend, payable on the 15th. Stanbic, 2 naira 50 kobo. Stanbic actually has the highest, payable on 21st. Let's talk about this. How can investors benefit from this dividend? What's your take first about?
Well, dividend is cash. And when an economy is going through what we are going through, cash is king, because it always creates opportunities.
Very true.
So Nigerian investors are dividend-driven investors.
Yeah.
They are not capital acquisition like what you get in the developed world. A lot of people do not get dividend because, again, they don't even wait for dividend because how much is the dividend yield and all that part. They normally trade more on capital appreciation. So yeah, so for me, I think dividend is king in this period, and the dividend is good. If you look at, with the exception of UBA, I think all dividends looks good because they just repeat what they did last year, and Stanbic even went above what they did last year.
Yeah. And
Zenith also went above what they did last year. GTCO stands where they are last year. Again, when you look at these companies, again, you look at the UBA, remember they are paying 25 kobo last year, they pay 2 naira, but with a less outstanding share, the outstanding unit at that time, because again, those that took part in the last right are not there, so they will benefit from it. So that meaning their share outstanding is higher than what it is last year. The same thing with GTCO. Their share outstanding is larger than what it is last year. The same thing with Zenith. Their share outstanding is larger than what it is last year. I don't think it's the same with Stanbic. I don't know whether they have also listed they did their right issue or is a public offer. I don't know I don't think they've listed them. So their own share outstanding could still also be the way it is. So when you look at that, that means the companies have paid more dividends compared to what they paid last year, half year, because they have more shareholders there. And then you can see that Zenith increased the dividend payout by 25 kobo, which is now they increased it by 25%. GTCO maintained the status quo. But again, UBA was the only one that has gone 25 kobo has gone really far. But when you look at the UBA numbers, they're very impressive numbers. Again, when you look at the GTCO dividend payment, and you look at the numbers, they are not impressive. When you look at Zenith, I think Zenith seems to be the one that have those impressive numbers, and Stanbic IBTC, the numbers are very impressive and by the dividend. But again, when you go down again and look at the Zenith share earning per share, you realize that it went down by almost 29% also. So dividends are good; they are king, especially in the Nigerian market.
What should investors do now?
Before that, let me add to it. Dividend payment is very, very important. One, it forms the part of what we call total shareholders return. You have, at least when you are investing in stock, you have the capital gain, that's the share price appreciation. Then on the other side, you have the dividend. So when you add two of them, that will now give you the total shareholders return outlook, which is really mentioned. So dividend is very, very important. And even some investors just even concentrate on dividend paying stock, because just like if you want a stable income, you can invest in fixed income asset. The same thing when you are going into stock. If you want a stable income, you not only look at the stock, you equally maybe focus on the stocks that do pay dividend. It's very, 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 very important. Very, very important, and it's very, very key, like you already mentioned. Now, the second to your question on how investors will participate. Normally, once the company declares a dividend, normally they'll now put the date, the qualifying date, the date they are going to pay. At times they'll tell you, okay, for those members whose names are on their register for so date. So investors should watch out for that. Now, if they are saying like now they are going to pay on the 10th, maybe if you look very well, you check the press release, you will now see, okay, as a so debt. That means you have to buy those shares, have to own those shares before that date. Before
what date do you think it is? Let's take for instance UBA or Zenith. Zenith is
it's always, I don't have it. It's always stated in the
press release.
in the dividend announcement.
Okay.
They will not tell you, okay, this is the qualifying date. Then this is the this is the last trading date. They will tell you, okay, your name must be in our register as so debt.
Yeah.
So it's always there, and investors should watch out for that. So that's very, very key, and that is very, very important.
Buying, selling, holding. UBA, Zenith, GTCO, Stanbic.
When I look at the fundamentals, I think if I'm the person that I'm already in the share, I mean, I'll collect my dividends, and then if I'm a new investor, I'll wait for the markdown. Then I'll key in, because like I said, if you look at all those, so for Zenith, if I'm an old investor, I'll stay in, collect my dividends, and still stay. If I'm a new investor, I think I will enter after the markdown. So it will be hold for a new investor, hold for an old investor, buy for a new investor after markdown.
When do you think markdown?
Markdown, I think markdown, the last trading day for UBA will be this, both UBA and also Zenith. I can't have the specific date, and also GT should be this week, because payment days are 10th of October, which is 10th. One is paying 10th, one is paying 11th. I think UBA is paying 11th.
No, 10th.
10th. Okay. Yeah. UBA is paying 10th,Zenith is paying 10th, and
GTCO is paying on the 15th, then and Stanbic is paying on the 21st.
So I think you still have room to maneuver through GTCO and Stanbic. I think for UBA, I think for UBA and Zenith, this should be the last trading week.
Yeah.
This should be the last trading week. I agree. And in addition,
there is even as an investor, you can adopt, like you said, he's talking about whether to hold or not.
Yeah.
Like I really always say, it's always good to look at the intrinsic value of those of the stock and know. Okay, one, because normally if a stock is undervalued, what do? You buy. If it is overvalued, then you talk about either you hold or you sell it. Do you get the point? So it's always good to look at the real value, not the market value that the market is shouting. Always look at the real value, which is very, very important. Yeah. And that's where your financial advisor comes in. It was not you now. Maybe Frank, now if I tell you now to give me the intrinsic value of UBA, you might not be able to give me. So, but apart from that, you can equally adopt what we call dividend capture strategy.
Okay.
Dividend capture strategy. So, okay, now I don't want to own UBA stock, but I want to take parts. I want to earn that dividend. So, like really important, I look at the dates and make sure that you buy before the qualifying date. So once you now buy and you take the dividend, you can now sell.
Okay.
And move on. That is what we call dividend capture strategy. The idea is that the risk there is that maybe after declaring you might have a pullback and you will lose money. But if you are focusing on getting the dividend, you can adopt dividend capture strategy. Just buy, take a position after the payment of dividend, then you sell. And that what matters, what encourages you to do that is liquidity, so that you'll be able to enter and you'll be able to go out. And I think the banking stocks, they have that. They have that liquidity. Four of them that at least 4 of them are paying this month, October. So they have that liquidity. So you can easily enter, you can easily go out.
I think again in Nairametrics, we're not giving up, we're not making the real numbers. Jika is a man of numbers, so we want to let you know the real number. I think qualification date for UBA is 3rd of October. So that means if you buy UBA by 3rd of October, you are entitled for the dividend payment.
Before 3rd of October, that's entitled to dividend
payment for 10th of October. For GTCO, is the last qualification date is 7th of October.
Okay.
So that means you are entitled for dividend payment 15th of October. For Zenith Bank, is 3rd of October. You're entitled for dividend payment for 10th of October. And for Stanbic IBTC, is 6th of October, dividend payment 21st of October. So
that's great. That's great.
Wow, this is amazing. Great. And what I'm just going to tell you is that make sure that if you want to invest, just make sure by the 1st of October, after Independence Day celebration, if you want to qualify for any of this dividend, you've gotten it, because 3rd of October, and 5th is what we're just saying. So
yes,
from the 1st to the 3rd, make sure you've done all you need to do to qualify
and 15.
For dividend. Let's move on to the final story we have here. Capital Alliance. Now, there's a divestment from Aradel. What do you think about that, Idika?
Well, it's normal thing. Capital Alliance is an equity fund and manager. So that means the midwife or they help people raise capital, and after that they can decide to pull out. So it's not strange. It's the normal thing in funding.
They're exiting.
So they're exiting. I think they are selling about 16% of their holding in Aradel. They have Aradel to list. So after the listing, they are pulling out. So it's not a big thing.
It's about a year or so, or less than 1 year.
It's 2024 they listed now.
Yeah, exactly.
They listed in 2024. So it's normal thing.
Yeah.
Normally equity investors, you bring in their funds, midwife you, help you, bring in fund. Now make sure that you are listed. After that, they can decide to still retain their holding there, or they can decide to pull out. But to investors, the most important thing there is that, what is the, by rule, NGX rule, you must have you must be in compliance with the free float requirements.
Very true.
And as at June, as at June this year, based on their statement of financial statements, Aradel has about 64%, 64.7% free float. That means more than half of their issue share capitals are for public to trade. Now with exits of capital selling their holdings, automatically assuming that the market bought those shares, it will increase their free float, maybe up to 80%. So for me, that is what is very, very important. That free float is key, and it's very, very important for me.
What's your take about divestment? How do you think this will impact investors?
Positively again. If you're an investor, that, like you said, liquidity and fundamentals is in Aradel. You have that liquidity there, you have that fundamental there.
Liquid.
So you see about 80% of that stock is available every day for trading. So that for me is good. But it has its own side. I mean, market forces are really at play in that stock. But again, you have to look at Capital Alliance. When did they buy this stock? I don't think they bought it when it was listed. I think they bought it even before it was listed as a low cap. And if you look at the kind of return they made, and that's their thing, that's how they operate Capital Alliance.
That's an equity fund.
That's their model operando. So I'm sure they'll be targeting another
green company.
Yeah. So, but again, as presently now, I think Aradel is a good stock. We've seen it listed at a high of about 850, and now selling at a low of about 500.
I think they have I think they have lost about 8% there about year to day.
So there's really a good. I still recommend that stock. I think it's a good stock to enter. It's highly liquid and the fundamentals are strong. Oil price is good now. It's stable. Output is improving. Remember again, Aradel have this. They are part of the conglomerate that bought Mobi. Is it Mobi asset now, or one of those assets? I'm part of the Renaissance Capital Group, so that also will come out to play in their year-end results. So for me, Aradel is good. Divestment, that shows that they've made so much profit. It's not negativity for it. I don't think so.
No, it is not. It's not at all. And I think for investors, this might be a good entry point.
Yeah.
Though the stock has been bearish this year.
Yeah, very
bearish. I think for me, for investors, it might be a good entry point because I see them going up.
Up till last week, it was still trading at 530.
Yeah.
Before it got to 588.
This might be a good entry point. That's what Idika said. I'm not the one who said it. So hold him responsible for anything that happens to your portfolio. if you enter. But then it's all good. Aradel, oil and gas, that is their major industry. We're seeing divestment from Alliance Capital, and that gives you an idea of how all of this plays out. They made a lot of money right from the time they listed in the markets, and now we're seeing that it looks like there's a new kid who's about to be on the block. And let's watch out and see. Maybe they're going to spearhead a particular listing that's going to happen. That is how we're going to wrap up this episode on the Market Watch. You see, anytime I close my laptop, it's an end. I'll see you on the next one when I open up my laptop every Wednesdays and Mondays. We have this conversation around the market, the NGX. We focus on the NGX and other areas around the Nigerian economy. This is Market Watch, brought to you by Nairametrics Television. My name is Frank. Make sure you like, share, subscribe. Cheers.